Okay, welcome to Gifford's Go-Tos for this week. Today we're here with an invaluable person in the home buying process, the mortgage lender. Today we're here with Sherri Statler with the Mortgage Experts. And this week we want to go over some of the things that'll help people what to do and what not to do when trying to buy a home. And she can kind of walk you through that process. So um, first things first, in case people don't get very far into this video, can you walk people through a couple of or a few of the don'ts that people should not be doing while they're in the process of trying to buy a home?
Sure. First, Justin, thanks for having me. Appreciate you allowing me to be on your go-to list. So when it comes to home buying, I would say there are two things that are most important to not do when you're home buying. The first one would be don't quit your job. So don't get mad at your boss. Don't quit. Don't get fed up until after. Don't quit your job. And the second one is don't get too excited to buy the new furniture, buy new housewares, appliances, things like that. Don't go spend a lot of money on your credit cards. Don't open any new credit cards. Don't buy anything until you've secured the financing and you're in the home. So I would say don't spend any money and don't quit your job.
Yeah.
Yeah.
And if you're thinking about doing any of those things, talk to you first.
Yes, I will talk you off the ledge.
Right.
Call me. I can double as a therapist also.
There you go. Another thing that people are kind of confused by and don't understand, what is closing cost, what is down payment, are they different, are they the same? So can you kind of quickly run down what are closing costs?
Sure. So closing costs are the transactional fees that are paid in conjunction with the home purchase and or refinance. So those costs could be lender fees or points that you might pay to buy down an interest rate. I generally try to tell people don't have a lot of those fees. When you go to the next set of fees that are pretty standard, it's going to be title fees and or escrow fees. And those title fees are going to be to protect you, that you are the owner of the home. It's registered with the county that you're the owner of the home. The lender requires it. So it's hard to get around those. And depending on what state you're in, there could be an escrow charge or fee included in there. And then the other most important fee that you have to pay for upfront is if you decide to impound your taxes insurance. And what that just means is that you want to include your property tax and insurance with your monthly mortgage payment. We do have to collect some of those fees in advance to put the right amount in your account. So when the property tax is due and when the insurance is due, there's enough money in there. So for those fees are all due at closing and paid for out of pocket. And that is separate from your down payment, which is a percentage of the purchase price that you're putting down to buy the home.
Perfect.
Yeah.
That should be clear to everyone from now on.
I hope so. And just to let everybody know, on a purchase transaction, the closing costs are paid for out of pocket unless you can get, let's say, a credit from the seller. You know what I mean? If you're getting seller credit or maybe a lender credit to help pay for those things, otherwise they have to be paid out of pocket. On a refinance, those fees can be rolled into the loan, so you don't have to pay them out of pocket.
Okay. Yeah. Gotcha. Nice. Okay. And then one thing I wanted to touch on, because I know that's something you're really good at and I appreciate, is one of your great strengths is communication with myself, the co-op, the other agent, and then especially the borrower or the buyer themselves. So can you go through some of the important things that communication can help kind of move the process along and make it a lot easier for the buyer?
Sure. I have a tendency to send everybody all communication on email and then also follow up via phone. It's a little bit daunting, but I just want to make sure that it's cleared every step of the way through the transaction, from submitting your file or submitting your offer with your agent, making sure that we call the listing agent and let them know you're well qualified. I've reviewed all of your income, your asset. I've pulled your credit. You are well qualified to buy this house. We want to make sure that they say yes when you put in that offer. From there, once you get into the transactional process, each step of the way between submitting your file, loan approval, appraisal, getting those final conditions in, we are going to always reach out to you. It's going to seem like a lot of emails and a lot of communication, but more is better. And if you have questions that are not answered on any of that information, I strongly suggest that you call me, you text me. I would rather you feel like you're bothering me and you have a peace of mind knowing that you know what you're doing, you know what you're getting into, and you feel good about it. We don't want anyone to have buyer's remorse when they're spending hundreds of thousands of dollars to buy a home. Right.
Yeah. Well, and the nice thing is both of us, and I would hope any agent and lender knows that you got into this. This is not a 9-to-5 job. And so I know a lot of people are like, oh, I didn't want to bother you. It was after, like, we understand this is not a 9-to-5 job. And so sometimes it's going to be a 7, 8, 9 o'clock phone call that needs to happen to make an offer or something like that. So yeah, that's huge to be able to have that resource and know that somebody's going to be there for you, like yourself.
Sure. And that's why I tell people, if you don't want to call, feel free to text me.
Yeah.
It seems less invasive. It's okay to text me. It's 2023. We can text people. You can say, hey, I need this. And I will respond to you as soon as I can. And that's okay. You know, I'd rather you be able to sleep at night and you bother me than be worried about what you're doing or maybe make the wrong decision on something. So it's okay.
Yeah. Yeah. Perfect.
Nice. Yeah.
Mm-hmm. Okay. So can you tell us if you've got a funny or interesting story about a transaction you've had that was either odd or interesting, that not like all the others?
Well, I don't think it's funny. It's kind of interesting is the only one I can think of. And I think it just happens to be my personality that, like, I don't want to take no for an answer from a lender for somebody that I know is well qualified. So I had a client who was like transitioning from the military to civilian life, and he had already gotten a job. He was, getting discharge payments and stuff like that for other income. And he had not gotten it yet. He had already had his job. He was not due to start getting these retirement payments for like 60 days, but he wanted to start this job. He wanted to buy this home. Technically, he was still employed by the military, but he was taking all of his vacation time. So when I said, don't quit your job, he technically was quitting his job and starting another one, but he had not yet started that new job and no longer was actually going to work for the military anymore. And we were actually able to get him into the home. So he was no longer in the military, just taking out the rest of his vacation, wasn't physically going to work, and had not yet started a new contract job. And we closed in the middle. But because we were able to show this is his guaranteed income from his job, he had to meet these requirements, drug testing, background check, things like that. And then verify that this is his retirement or his pension payments and stuff like that. So it's kind of funny that he was actually able to buy a home, even though he wasn't technically working.
Right.
Nice. But again, let's go back to don't quit your job. Don't start a new job. If you're thinking about doing it, tell me ahead of time. Tell me everything up front. Don't keep any secrets. Tell me everything up front.
Yeah. So don't use it. We said odd and interesting because this is a one-off. Don't use this as a model for your.
Yes.
So what are some of the common surprises that you find people coming into the buying process? There's a lot of things people think they know, they're not sure about. What are some of the surprises that you find people have when they start this process with you?
So I feel like a lot of people are hesitant to buy because they think they have to have 20% down, or they don't think that they don't want to pay mortgage insurance, and that's horrible. And there's not a program to do that. Ideally, you want to eliminate mortgage insurance if you can. And that's why people say you should put down 20%. But renting is also like throwing your money away too. And so it's much better to get into a home and you don't always have to have 20% down. There are a lot of loan programs out there where you can get down payment assistance. So if you don't have the income, if you qualify, there's down payment assistance programs where you're getting grants or money that's free to help you put down. But you can buy a home with as little as 3% down or 5% down. There are some programs where you can put zero money down, depending on if you qualify for that program or what area you're buying in. So right now, a lot of lenders have incentives to help people in certain areas buy homes. So you don't always have to have that 20%. And there's loan programs that don't always require the mortgage insurance. There's ways to get around that. And so my job is to show you all of that, give you a list of all of the different payment options with mortgage insurance, without, with this amount of down payment, with that down payment, and figure out where you fit in that and give you those options and help you understand what they are. And then you get to choose what you want to pay, what you want to get into. Real estate is a really big investment. And I think if you can get into a home, just try. And if you don't, Justin and I will help you, right? We will help you figure out how to get into a home at some point and let you know what you need to do. So if that takes another 6 months or a year, it doesn't hurt. It doesn't cost you anything to try to get pre-approved for me. That's my time and I'm happy to do that. So then we can let you know what you need to do. Don't be scared.
Right. Yeah. Well, with that in mind, I know some of the apprehension people have is, they understand that pull credit, and some people don't understand that, say, a mortgage credit pull is different than, say, if you're trying to get an auto loan or something like that. And so there's a lot of times that people are interested in knowing more about that. So they're a little bit less apprehensive. Can you walk through people how the pulling credit, the credit pull works, and letting them know that they do have options to kind of shop that within a certain amount of time?
Sure. Yeah. When you are pulling someone's credit for something with collateral, like a home or a car, an auto loan, the hit against your FICO score is significantly less to almost none when you're buying something and they understand that you're going to do some shopping. So you're going to maybe go to one or two different auto finance companies. You're going to go to one or two or three different lenders to look what can they provide. So getting your credit pulled for auto loan or even for mortgage to purchase does not affect your score like it would be if you were going to open up a credit card, an unsecured credit card, getting a credit card from a retail store or a furniture store or financing something like that. That's going to hit your score. Unsecured credit is going to hit your score way worse. So I always tell people you can probably have your credit pulled maybe around 3 or 4 times. If you go to myfico.com, it actually tells you can have your credit pulled a number of times within, I think it's a 45-day period. So when you're shopping for a home, if you make sure you contact lenders within that 45-day period, it's only going to count as one credit pull versus multiple credit pulls. So once you know you've committed that you want to go into this process, reach out to people. It's okay to shop with lenders to figure out what the best deal is. Some people go with direct lenders as retail. Myself, I'm a broker, so I work with multiple different lenders. So I can do a little bit of the shopping for you, and it would be one credit pull, but it's definitely okay to look at the competition and see what's available and have more than one credit pull, and it's not going to affect your score negatively.
Yeah, and just in addition to that, that got me thinking about some of the things where people shop and they're like, oh, well, this person was able to do this in a certain amount of money, and you quoted me this. Why is the difference? So can you walk through? Sometimes people need to be walked through kind of apples to apples comparisons,
Sure.
knowing that this number doesn't include. Anyway, that you kind of understand my question. They need to know that there's some things that they need to look for that you can kind of walk them through, that here's this and there's that, and this is why certain price is what it is.
Yeah. So going into when we were earlier talking about closing costs and fees like that in the transaction, not everything is about interest rates. If someone says, "Oh, I got a 4% rate," and you gave me a 4.5%, they're lower. That's not necessarily true. The interest rate's lower, but they might be charging you a lot more in fees. That doesn't really make sense. So, for instance, if you're paying a lot of money or you're paying points is what they call it to get to a lower interest rate, that just means you're buying down the interest rate. And in a rate market that's volatile, I would say, unless someone's giving you a credit, I just wouldn't do it. If rates are going down, why pay to lower the interest rate if in a year you could refinance to a lower interest rate and it costs you $0? The amount of money between a 4% and a 4.5% on any given loan could be anywhere between, let's say, $20 to $50 per month. And so if you can't recoup that cost within 1 to 2 years, it probably doesn't make sense to buy down the interest rate. You're just paying a lot of money up front and it's not worth it. If the payment is only $20 different and you have, $500 or $600 or $1,000 less in closing costs, that probably is going to be better if you can refinance later down the road and it not cost you anything. So I always tell people, when you want to compare apples to apples and oranges to oranges, always get a loan estimate, and let's look at a loan estimate from one company to the other company and go line by line and see what the differences are so that don't just look at the interest rate, don't just look at the payment, because there's always costs that are built into it on the back end, and that's where you want to see what the difference is.
Yeah, perfect. Yeah. And then the final question is, can you spell amortization?
Yes. And I'm going to write it down first.
Okay.
AMORTIZATION.
Nicely done. Nicely
Thanks.
done. So the reason I asked that, I thought that'd be a little funny, but also, can you talk a little bit about, some people get so bogged down in interest rates, kind of like what you were just talking about, but tell people a little bit about, if they have the ability to pay a little extra on each payment or one extra payment a year, how that can impact that amortization and move up how much money they're paying in interest over the course of the 30 years, say.
Sure. So I usually tell people, if you're able to make one extra payment per year, you can cut down the repayment of your loan maybe from 30 years to 25 years, or from 15 years down to, 8 to 10 years. And by doing that, really, you just have to take your mortgage payment and make one extra payment a year. So if you just take your mortgage payment, let's say it's $1,200, you divide that by 12. If you just make a $100 extra payment, so instead of $1,200, you pay $1,300 every month, you can lower your repayment by almost 5 years. So if you ever have any extra money to put on there, do that, because they are collecting more interest at front. When you do your mortgage payments, they always collect the most interest up front and principal towards the end. So each mortgage payment pays a little bit less interest and more principal. But when you make those extra payments, they apply it straight to the principal. So your balance goes down over time. So if you can, always look at paying one extra payment per year and just divide your monthly payment by 12. Or if your rates are high, keep in contact with me and see, is there an opportunity for us to refinance you to a lower rate on a shorter term where you can continue doing that same thing, where your payments don't change that much and you can pay off your home sooner.
Nice. So that's about all I have for questions for you. Is that I tried to talk about a few things that I know people have questions about when they first get into this process. Mm-hmm. Is there anything else you think would be worthwhile for people to know that we didn't really touch on today?
I just think the most important thing for people to know is to not be scared. If you don't feel like you have the time or want to do the research, it's okay to ask a loan officer questions and establish a relationship with a loan officer, with an agent, with a realtor, to get comfortable. If it takes a little bit of time, we understand that. Just call us, ask the questions. If you don't think you're ready now, I see lots of people are always shopping on Zillow or realtor.com. I call it like their window shopping. And they're like, oh, I wonder if I could afford this or that. And they use the calculator that's on those websites to try to figure out if it is something they can afford. Well, a lot of times those like demographics and the factors for like the interest rate and the down payment is already put in there. It's not necessarily what you qualify for. It's a general market, analysis, and that gives you this thing. You're like, oh, that's too much. In my experience, I've found when I pre-approve people, they generally qualify for more than what they want to pay per month. So, I qualified somebody before and I said, okay, well, you're qualified for a monthly payment of $3,000 per month. And they're like, oh, Sherri, no, are you crazy? I don't want to pay that. I don't want to pay more than $2,000 a month or $1,800 a month. So then, we kind of go backwards. And a lot of times I say to people, why don't you tell me what is the max payment per month you're comfortable with? Are you renting right now at $1,500 a month and you don't want to pay anything more than that? Okay, let's figure out where that puts you. And let's start there first and kind of go there. So I would say, ask the questions, reach out, just get pre-approved.
That's a good. Oh, sorry. Go ahead.
Yeah, just be ready to actually buy something when you are window shopping and something comes up. You want to confidently say, I know I can afford that. I love this house. I want to see it. I want to put in an offer. You have all the legwork done. Getting pre-approved does not mean you have to buy tomorrow.
Right. And that's a good point, that a lot of people get so bogged down in rate concerns with the interest rate and things like that. What they really need to be asking you is, or talking to you about, is what you just said, is that number that they want to their mortgage payment to be. And like you say, working backwards from that and getting yourself bogged down in the whole interest rates are too high, I don't think I can qualify. Like you said, it doesn't cost them anything to talk to you and find out, hey, I'm ready or I'm not ready. So there's no reason not to at least reach out.
Yeah, and generally speaking, rates are higher today than what they have been over the last 5 years. If those rates go back down lower, the competition to buy a home that you might be looking at today is going to be a lot harder. Right now the rates are a little bit higher, but can we get you into that home? Can you afford it now? Sure, but there's not as many people putting in offers on that same home. If the rates go down in 6 months or a year from now, if that home is still on the market, that house may get 5 to 10 offers. And it gets competitive, and then you're overpaying for home. So you might have a lower interest rate, but you're going to end up spending more for that home than what you were today. If you buy the home today and the rates are lower, then you can just refinance and it becomes even more affordable for you.
Yeah. Perfect.
All right.
That's awesome. That's super helpful. So I think that about wraps it up. I would just want to let people know if they want to speak to Sherri or have any questions or whatever. We're going to put your information down and your application link down in the comments. And I just wanted to thank you for your time. I appreciate it. That was some great information, and I hope that that was helpful to people to kind of get the ball rolling and let them know that they don't need to be scared that the worst case scenario, it doesn't work for them now, and it works a year from now or something, but at least they have some information, which is the best thing, I think.
Sure. Yep. Thanks for having me.
Yeah. Awesome.